Hi, this is a brief discussion of what's expected of you in the group case study for financial reporting and analysis this semester. If you have a look towards the end of your subject outline, you will see that there are 2 pages there about evaluation of the case study, and there are also some general notes for the case study. I'm going to talk about the evaluation first because that directly impacts the requirements of you in undertaking the case study. Remember that this is a case study in accounting. This is not a case study in business strategy. So the focus here is upon accounting issues and accounting flexibility. So if you have a look at the 8 points that we have listed in the requirements under evaluation of the case study, you will find that the middle ones, the red ones that I've identified here, are probably the key ones. They relate directly to accounting. Now, having said that, item 2 is also important. You cannot start on item 3 or 4 until you've done item 2. So your coverage of item 2 is also very important. So let's talk our way through the expectations. Company 1 is just a brief setting of the scene. Tell us what the company is about, tell us what it does, tell us if anything interesting has changed with the company. Basically help us understand what the company does. Now in item 2, we basically want to move into the accounting area. So by requiring you or asking you to identify the key accounting policies, we're basically saying, look, these guys have got accounting choices. Which accounting choices matter? So if you're looking at a company that has a lot of credit customers, for example, how it manages accounts receivable and doubtful debts may be important. If you're looking at a company that's into profit investments, then the accounting for investment properties accounting policy will be relevant. Now what we're asking you to do here is identify 4 or 5 key accounting policies. We don't want you to look for every standard that's relevant because, let's face it, a lot of companies will have a lot of relevant standards. We want the most important ones. So we're asking you to identify 4 or 5 key accounting policies. Okay, now once you've done that and you've identified the accounting standards that apply, you should be in a position, once you've looked at those standards, to identify the amount of flexibility that companies have in relation to the choices that they can make for those particular accounting issues. So for example, if one of the accounting policies were property, plant and equipment, because they had a lot of equipment, then you know that the flexibility would relate to their choice between the accounting and cost model, also choices in making assumptions for depreciation and so forth. Really what we're asking in asking you to talk about flexibility is, given a set of circumstances, how many choices or how much choice does the company have in reporting that? So is the range of numbers that they can report without changing the economic reality big or small? So in other words, can they put a particular spin on the reality through the use of accounting? Remember, this subject is about accounting choice. It's about saying, given economic reality, what options do you have in reporting that? Some standards do not give you a lot of flexibility. Some give you a lot. And we've seen some of those so far in this subject. Okay, the next thing that we want you to do is evaluate the accounting strategy. So what we want you to do is talk about, what are they trying to do with their accounting? Are they trying to appear low risk? If you were a mining company in the last few years, when the government was trying to tax mining companies, perhaps you were trying to make yourself appear to be a small target. So say, oh, look, we're not profitable, please don't tax us, something like that. What are they trying to do with accounting? Are they just trying to make themselves appear low risk and large profit? Or are they trying to do something else? It is important to understand that for item 4, we are talking about accounting strategy. This means accounting choices that are made. We are not talking about business strategy. We're not saying, look, are they expanding into orange plantations or apple orchards because of some other thing that's happening in their business. We're not asking about business strategy. We're asking about accounting choices, not the underlying business choices. Remember, this is an accounting assignment, a financial reporting assignment. The next thing we want you to look at is evaluating disclosure. Okay, so I guess there's 2 ways of approaching disclosure evaluation. One is, do they comply with the rules? So do they disclose everything that they're required to disclose by the standards? If you have a look at what standards require, for example, when you have to disclose information about calculation of recoverable amount, do companies disclose that in a sensible way, or do they provide information that actually allows you to evaluate what they've been doing? Because some companies do just stick to the letter of the standard. So they follow the letter of the standard, but it doesn't mean they're giving you useful information. Does your company, for example, exceed disclosure requirements? So does it provide more information than it's required to? Okay, the next item is looking at potential questionable accounting numbers. So basically we're asking you to look here at whether any numbers are dodgy or suspect. Now I don't know how to really say that, so if you were going to look at questionable accounting numbers, you might compare this year's financial statements to last year's and see whether a number or numbers have changed a lot. Alternatively, is a number really small this year but it was really large last year? Is there a lot of volatility there? Can that change be explained by real economic changes, or is it possible that an accounting trick or something was undertaken to change that number? So you could compare the company to its financial statements last year, or you could compare to other companies in the same industry. It's up to you. Okay, so is it possible that they're using some accounting tricks or some creative accounting? Now, if it is, if you argue that that is possible, then you might be able to do 7, which is undue distortions. Now, we know that 7 is going to be hard to do. If there are distortions there, the company is hardly going to tell you about them. So really, item 7 requires a bit of speculation. You might say, okay, we think that they have impaired a whole bunch of assets because they're a new management and they want to look good next year, but we don't know what the amount is. Okay, that's fine. If you don't know it, speculate. Show us what journal entry you would do and explain it to undo the distortion that you think is there. Okay, bear in mind 7 is going to be hard to do, so a lot of speculation, a lot of imagination will be required in that one. Item 8 should be easy. Look at least 2 recent press announcements about the company. So has the company been in the news? For looking at that, I would suggest you look at the Factiva database, Factiva, available through the UTS library. Okay, so that's what we want in terms of content. Now, let's talk about the presentation. You will have 20 minutes to present in either week 13 or 14. We will allocate you to weeks, probably in week 11 or 12. Don't worry, generally people get the week that they want. You would think that most people want to go into first week or last week. Turns out some people prefer the first, some prefer the last. What are the things we require from you? We want the presentation to be engaging. This means you should speak clearly and fluently. Try to avoid reading. Make eye contact with the audience. Get the audience interested. I mean, these are people looking at somebody else's presentation. They're probably going to be bored. Can you get them interested? And there are, I guess, various things you could do. All members of the group should be there, but of course not all members must present. If you're going to choose a person to present, please practice first. Make sure the person you choose to present, or the people you choose to present, actually present well. Looking at interest response from the audience, you're probably going to get more interest if more people present. If you choose one person and they're really boring, it's going to hurt us watching that. Okay, so you've got 20 minutes to present, then there are 5 minutes for questions from other members of the class. So that's what we expect in the presentation. Now, as part of my marking grid, I have a number of things that I do as soon as I go in and get your assignment. We require you to give us the case study at the beginning of your presentation, and it must be complete. If you give us a part of it that's missing 5 minutes later, too bad. You'll be marked down for it if it's missing. Everything has to be there when you start your presentation. And what are you required to provide? Well, if you look at the requirements, you're required to provide the financial statements, the balance sheet, the income statement, the cash flow statement of the company, any relevant notes to the financial statements that you refer to in your assignment or in the presentation. If you do anything particular, so those things will be punished if you don't give us them. If you provide any extremely innovative or original analysis, there might be some bonus marks. If you go over 6 pages, there will be a penalty of 10% per page. Mind you, that page limit doesn't include tables and charts. So some information can go into tables if it's easily presented in tables, so that in the writing you can focus on the story that you're trying to tell. And of course, we want you to give us at least 1.5 spacing, so that when we look at it, we can read it and make some comments. Okay, so that's what we want in terms of marking. Now, I've talked about penalties. Let's just talk about submission requirements. So for submission requirements, what we're doing here is requiring you to submit the assignment at the time that you start your presentation. And on the front cover, we require the names and student numbers of your syndicate, and within 1 day of your presentation, so that can be after the presentation, we want you to submit the assignment through Turnitin. So what we're doing there is to make sure that it's your own work and it hasn't been copied from anyone else. Now, we will look at some of the Turnitin assignments to make sure they're the same one that you actually gave us on paper, but we will be marking the paper ones. The main purpose of Turnitin is to see whether there is any text that has been copied from anywhere else. Now, when you submit your file name, because we download those files, we want you to use a specific file name. And that file name has to be the company's 3-digit ASX ticker. So the company's stock exchange, securities exchange listing code. Okay, please pay attention to the format. Please pay attention to the limit. No more than 6 pages of actual writing. Please pay attention to the penalties. Penalties if you exceed 6 pages of actual writing. Penalties if you, if you provide it late, then yes, there will also be a penalty. Okay, so I hope that helps you understand what we want from you in the case study, and hopefully everybody is allocated to groups now. So I suggest you start by downloading the most recent financial statements for your company, and you can already start identifying the key accounting policies. Best wishes.